think when you look at everything that's going on in the world, all these geopolitical tensions, inflation where it's at, all these trade wars, like I think gold's only going higher.
Hello, everyone. Welcome to Boom, Bust, and BS. Right. Anthony, do you want to introduce everybody?
Yeah, well, thanks. Look, today we have a special guest who I've known for a long time and talked a lot over the years. So excited to have him on the show. Victor, who is the founder and runs AMEX Gold. We're going to talk a little bit about gold today, and then I think we're going to talk a little bit about the project and really talk about a market that's kind of the most exciting it's been in at least a decade. So, Victor, thanks for coming on today. And I got to kick off by asking you, what's happening? I mean, why is gold at 3,300? What's the deal here?
Well, I think when you look at everything that's going on in the world, all these geopolitical tensions, inflation where it's at, all these trade wars, like I think gold's only going higher. I'm looking at some of the stuff that's being printed out there. I mean, it's amazing. Like, there's a monthly chart that's showing a 40-year cup and handle breakout targets. I was just reading this morning. So they're looking at an upside to 4,000 plus with a longer term technical, targets in excess of $8,000. Like when I look back a couple of years ago when you had, guys like Lassonde saying that, gold was going to go to 10,000 and 30,000, and just recently you had Simon Marcotte saying the same thing. And it's quite impressive. It looks like, this gold bull market is finally,
So
getting a hold, and it looks like it's
what
just.
does it mean? Okay, so you got the physical at 3,300, maybe it's going to 4,000, maybe it's going higher. Like I remember in my career, like, oh, we were talking about all-in sustaining cash cost of 400, and then we were talking about 600, and then we're talking about 800. I mean, what does this mean for the economics of gold projects, and in particular your gold project? Because I literally cannot remember a single gold project that would have been taken seriously at like $2,500 gold, right? Like the investors would have said, oh, like, what is your all-in sustaining cash cost at 1,100? So I mean, at 3,300, what are your all-in sustaining cash costs potentially at your project? I know it's early, but and
Well,
what does that mean for profitability?
yeah, it's quite impressive. When I look at the numbers, we published a preliminary economic assessment back in, and it's not that old. We're talking about in November of 2024. It was actually November 13th, and we actually put in. We're using $2,000 gold. We have sensitivity analysis. We have sensitivity analysis all the way to 2,600 and $3,000 gold. But those numbers at 2,000 gold are quite impressive. At some point, we will update. We did promise to the market that we will update a resource and because we've been doing additional drilling, so we'll use a different date, and also moving forward with a new PA and eventually with a feasibility study, as we did in our last press release where we talked about our path to production. But yeah, when you look at the numbers, I mean, it's quite incredible. Our AISC that's in our PA is $807 for the life of the mine. When you're looking at $3,300 gold and you're producing 100,000 ounces a year, it's quite impressive, and hopefully we'll even be producing more than that down the line. I mean, that's hundreds of millions of dollars of free cash flow.
It's crazy. It's sort of the dream that investors always wanted. If we think about a decade ago and the complaint against management and the industry, no one makes money, but it feels like at these gold prices, people are going to make money. So I don't know if you saw it, but this morning in the Globe and Mail, there was an article, and it was an op-ed. I didn't even recognize who wrote it, but the op-ed basically said, here we are, we're Canada, we've got gold, we know how to finance gold, and we've got potential to make gold mines, and we're not doing it. And why don't you tell us a little bit about where Amex is located, but also, with all the geopolitical things going on in the world and this desire, I think, to sort of bring mining back to Canada. See, it feels like there's a kind of this realization that that's a path forward as a country. What do you think the meaning of having a gold project in Canada is going to be for not only the valuation in the market, but also for just getting it funded and moving it forward?
So we're quite fortunate that we actually have a project that's quite advanced. We have more than 500,000 meters of drilling that's gone into the project. We have an economic study. We're just going to continue advancing the story. But I think
Can I stop you there?
yeah,
A lot of our viewers are kind of new to mining,
yeah.
and they're just discovering it. So when you say you have 500,000 meters of drilling, what does that mean? Is that a lot? Like, help us understand what I don't know. What's, I know what a meter is, but like,
Yeah.
should it be 100,000? Should it be a million? Like, kind of put that in perspective for someone who maybe is just kind of learning about gold mines and what that might be like.
So I'll put it in dollar terms. Since we've come into the project I became president and CEO of this company in 2016. We made the discovery in late 2018. And basically, we've put in close to $120 million of exploration on this project. That's a lot of money that's gone into the ground, which that has enabled us. Like we always say, put the money in the ground, and that's where you're going to get the benefits from. And that's exactly what we've done. If I put it in dollar terms, that is a lot of drilling for. Here I can call it for a junior exploration company, but we've gone beyond that right now. We're actually positioning the company to becoming a near-term producer. That's what you want to do. You want to start taking advantage of these prices. We're in a good jurisdiction. Like when we start checking the boxes, you're really checking the boxes here. You're in a good jurisdiction. There's mining law. There's a set path on environmental work. Everybody wants to fast track these things right now. So it's really, we're really in a fortunate position right now. And we have great shareholders. Like, last week, one of our major shareholders, Eric Sprott, purchased. It was in the Globe and Mail where he purchased in excess of another $1.4 million worth of stock, which takes them well over 12%. We also have a producer as one of our major shareholders, also Eldorado, which they have 9.9%. So it's I think we're in a really, really good spot, and continuing to move this project forward. We have a great team. We're going to continue transitioning over to bringing in more and more mining people. We have great geologists, but now we're going to continue bringing in mining engineers, guys who have done this before.
And for someone who's kind of new to it, uh, you guys have been fortunate. You've had funding. You've done a great job leading it. You've got the right jurisdiction. You've got great shareholders. Eric Sprott, for those who don't know, is maybe one of the most famous kind of mining investors over the past few decades. I think everyone would agree with he's had a really major influence. Uh, how long would it take to make a mine? Like when I mean, I get that there's permitting and no one really knows, but is it a couple years away, in Canada for someone who's thinking about this, who doesn't really know mining? What would you say? Like, how long does that process take from here?
So the minute in Quebec, the minute you have your feasibility study, you have a positive feasibility study, it launches this process called the BAP. BAP is an acronym. It's BAPE. It's an acronym. It's in French. It's a Bureau d'audience environnementale public. That just means it's a public audience for environmental work. It's basically they do anytime you have to do permitting, it's public forums. So there is a set time on it. It pretty much takes almost 2 years on it. But the governments have been very vocal on fast tracking. So we'll have to see a project like ours. Is it one of the ones that could be a fast track? Yes, but at the most you're looking at 2 years from the date that you do your feasibility, your positive feasibility study, and it's really where we're also located, right? So we're right beside where a previous mine was built. The town that we're in, it was actually that town was built because of a mine that was next door to us. We have great community relations. We have great First Nations relations. When you go into town, people want to know, when is this mine going to actually be built? Like, when are you guys going to go into production? I guess when everybody saw the preliminary economic assessment, and you're seeing these kind of numbers, this is something where we really want to move forward. We're going to unveil all this in the coming months. We're going to unveil exactly how we're going to do this path. Our last press release, we did mention it. It's our path to production. We started some of the environmental work. We hired well-renowned firm here in Quebec. So we continue moving forward. I mean, we can go over some of those economic analysis numbers too. They're just fantastic.
One of the things that's happened in other cycles in commodities is you have the juniors. I mean, excuse me, you have the senior miners who, they tend to get swept up in all sorts of things, distracted from the actual mining. And, they leave exploration, or their exploration is really giving money to juniors. And now we're sitting here and you're one of the big gold producers, and you're years behind the curve on exploration. And your guys' economics are set to $2,000 gold or something. I mean, they're set at a fraction of today's gold price. And do you foresee a wave of gold M&A in the coming 18 months as the gold price stabilizes or continues to rise, as all these projects, the profitability on them becomes insane? Like you guys are going to literally print hundreds of millions of dollars at this gold price a year on a free cash flow basis. I mean, do you see that majors will come and pay up for projects like yours?
Absolutely. This is a period where the M&A cycle should be starting. We've seen a little bit that has started. I do believe that for the quality projects, especially the most advanced ones and the high grade projects, absolutely. The producers they continuously deplete their reserves, so they're gonna have to start moving around and looking for deposits that are that can benefit them, that can fill in the ounces that are being depleted. And definitely, when you look at the Abitibi Greenstone Belt, I mean, we're sitting right in the middle, right in the middle of it, and that's where I believe that there should be a lot of transactions within the Abitibi Greenstone Belt, and that's all of it. From Val-d'Or all the way to Timmins. From north to south, there's 5 different greenstone belts within the Abitibi Greenstone Belt. Absolutely, I do believe that there's going to be a lot of M&A that's going to be coming forward. And you know what, gold at the price it is, we're all talking about it going higher and higher, and it's incredible because even at these prices, when you look at how much gold has gone up, all these producers, their costs have not gone up at the same level where at the same percentage where gold has gone up. So it's quite profitable right now for all the companies. So I'm pretty sure that the majors are going to be looking for, or the producers, not just the majors, even the mid tiers are going to be looking for acquisitions. I think we should be looking for that. There's going to be a lot of the M&A is going to pick up in my opinion.
I think you're right. I mean, are you going to be at Beaver Creek this fall? I think it's going to be absolutely kind of crazy this fall with everything going on. I rarely get excited. It's been so long. I've been beaten up. Right? It's been a hard decade for all of us. And if gold price holds up, how can people not make money in the sector, right? I think, and a lot of our viewers are new. Like I said, they're new to mining, and it's pretty amazing to see these prices and the economics on these projects. So that's exciting.
Yeah, no, absolutely. I mean, when you look at so for people that are new, the AISC is the all-in sustaining costs. I mean, a lot of the all-in sustaining costs right now are, in the 1,200, 1,300. Some of them are below 1,000. We're fortunate enough because it's high-grade gold. We're right next to the infrastructure. We're right in your city. We're not far from an airport. We have a workforce. So our all-in sustaining costs, you're looking at 800 and change for this project. And we're not unique to that. There's other projects also, but even at that, projects that are 1,200, 1,300, when gold's trading at 3,000, the way it is, it's a lot of profits, especially.
What I haven't seen yet, I'd be interested to get your opinion on is, in these cycles, and this kind of makes me think we're at the very beginning of the cycle. Eventually how it ends up is, you and I are at a cocktail party and someone turns up and says, "Hey, I just staked this ground and raised $20 million to drill holes."
Yes.
Like it gets early. I mean, if you had an early stage, which I don't think you do, but if you had an early stage project in a different vehicle, is there money for $5 million of exploration? Are we there in the cycle where people are raising kind of greenfield exploration dollars, or is it still kind of too early for people to be out there looking for new stuff?
It's not there yet. I don't see it there yet. I'm still, from what I'm hearing, it's still very tough for the early stage, but it's gonna flow down. Like if you look at the big movement in stocks, you've had the majors have moved, like, well, all the producers have moved, and I think now it's going down to the near-term producers, or the advanced exploration projects, and eventually it's going to filter down. It's going to filter down to the greenfield project. I mean, you and I both have seen these cycles in the past. That it does filter down, and it's usually the tail end of the tail end, meaning could last a couple of years after that. But yeah, exactly. We'd be at a cocktail party and somebody just says, "I just raised $20 million for for some ground that they just staked." I've seen that, yes, and you have also for.
Yeah. Christian, I know we've kind of boxed you out here.
Yeah, no, two our buddies going at it. There still seems to be quite a big disconnect between, if gold prices stay this high, Victor, between that and the valuations of, the gold miners.
Yes.
I mean, it still offers what could be an incredible opportunity. What's holding it back? And, when or why?
Actually, what is that number? Okay. What's your market cap today, Victor? A ballpark.
It's around $145 million.
Okay, so pick 145 million. If we did the NP, what was the top end of the range in your PEA? Like, what was the top end of the gold range? 2,600, you said?
Yeah, so the 2600 if I give you even the after tax NPV the after tax NPV 5% at 2600 is $914 million.
Oh my gosh. So that means at $3,300 gold, it's going to be like 1.4 billion. This is so fast. So,
Yes.
for those watching, I spent most of my career at a private equity fund and a hedge fund. And
Yeah.
one of the big problems that we always faced when we were financing mines was you'd have a negative NPV. So someone would come to you and say, our NPV, net present value, so you discount the cash flows at a discount rate, right? Is 300 million. Well, that's fine, except that the capex, the amount it costs to build the project, was 400 million. So you say, wait, you want me to spend 400 million for an NPV of 300 million, and it just didn't work, and it was a huge problem. But this is actually so exciting. I mean, what Victor for you guys is saying is, the cost to build this would be a few $100 million. How much is that? What was
Yeah,
the capital?
exactly. Our capex is $229 million.
Yeah, just to pick a number, 200 million bucks.
Yeah.
And at $3,300 gold, I mean, I'm saying this, not Victor, but just offhand, it looks like you could have a discounted NPV of 1.3 billion dollars or something. I mean, we got to do our work here, but that's exciting because in mining, it hasn't been that way since, I think, like 06, 07. I mean, that's pretty spectacular.
Oh, absolutely. There is definitely a disconnect between the prices, especially for advanced projects that actually have economic studies. There's definitely a disconnect here.
With gold, now let me ask you a question, Victor. With gold,
Yeah.
with copper, or uranium, or any of these metals, right? We would sit here and say, well, the copper price is high, and if we build these 7 mines, all of a sudden we're going to overflood the market. Like that whole commodity circle of high prices a cure for high price, low prices a cure for low price. I don't think gold really works like that, right? Like if all these mines get built, I don't think it really even have any impact on the supply demand dynamic of gold.
No, you're right. I don't think it does, because as the monetary supply increases worldwide, that's where you're getting all these central banks. If you want to back it with gold, like you're just going to need more and more gold to back all that excess or that increase in monetary supply. So it's I think we're in a great space, and yeah, I agree with you. It doesn't affect it the same way where you got a couple of mines that come online and all of a sudden the market is oversupplied, and I think the easy ounces are pretty much found everywhere. Like this is where you need to be an advanced stage project here going forward, and there's going to be other discoveries with the greenfield projects also, right? As long as there's money.
I know we're getting into the peak when I hear that fill in the entrepreneur's name blank just raised $300 million to build a gold mine in the Congo.
Yeah.
Remember, was it Bannerman? Banro was the name of it, right?
Yeah.
When I hear that someone just raised $400 million to build a gold mine in the Congo, that's when I'm a seller. That's when I know. Because why is that, everyone? The reason is because you've got Victor and you've got these projects in Canada in a safe jurisdiction where you have the rule of law, where you can debt fund it, where you're listed in North America. We have all these factors that make building a mine in Canada more attractive. Now, look, there are great projects in the Congo. I don't want to,
Yes.
but it's just, if you're an investor thinking about allocating money, it's a hell of a lot safer to send it into Canada at this point in the cycle.
Oh, absolutely. And look at that. We look at our project and we've talked about NPV and all, and the capex, but look at the pre-tax payback period is 0.5. It's half a year. That's a $2,600 gold. So it's,
I love a bull market.
yeah, there's gonna be other, as gold goes up, that's what's gonna happen. You're gonna have all these great numbers that are gonna be showing up. And I think as long as it's small capexes, we're gonna be able to finance most of these projects that are gonna be coming.
I think Christian and I are looking for a job. You need anyone over there at AMEX? We'll get some paper.
Absolutely.
That was amazing. Well, look, Victor, I don't have much else. I mean, this is amazing. I think everyone watching, you got to go have a look at these names. You got to have a look at Victor's name, obviously, really, really successful entrepreneur and executive in the space and has done a fantastic job. But on these numbers, and do your own research, like there's just going to be some massive winners in the space. And, obviously we like Victor and think that he's done a fantastic job, and his company has the potential to be one of them. So appreciate you coming on and sharing a little bit about your thoughts about the space and the story.
Well, thanks for having me on, and I hope we'll be on. We'll come on soon again as we put out more and more news, and love to talk about the market in general, and the gold space is really great.
Yeah, thanks for having us.
Victor, thank you.
Thanks.